This is George Scholes from Agoracom talking to you directly from the floor of PDAC 2007, the world's biggest mining conference. With us today is renowned market analyst Paul Van Eeden, who's got some thoughts on the Chinese developments last week. And I'm sure a lot of our listeners want to know what your thoughts are and how that's going to play out in the future of this market.
Thank you, George. Yes, China announced on Monday of last week that they're going to set up a task force to clamp down on illegal investing activities in the Chinese market. And the Chinese market on the next day, Tuesday, fell 8.5% in one exchange, 8.8% in another exchange, and the contagion from that swept across the globe, and of course, as you know, everything went down. And that was interesting because it felt a lot more like a psychological knee-jerk reaction to an event in China that really fundamentally probably doesn't have as much impact as what the markets attributed to it. But what it illustrates is the fact that there's so much money being managed by hedge fund managers, mutual fund managers, all sorts of speculators, and they're all buying things that they have no real attachment or value to. They're trading these stocks as if they're baseball trading cards. They're not investing in companies. And so when something happens to rattle their emotional cage a little bit, they all dump the stocks because they're all nervous. They're all holding hot potatoes. And that's not a very good sign in a market. It shows a lot of weakness in the market. And I think therein lies the risk, because China itself has been credited, if you will, with the demand for base metals, with the demand for all sorts of materials that they're soaking up. But a lot of that demand from China is displacement demand. In other words, things that used to be manufactured in Europe and North America are now being manufactured in China. This is not internal Chinese demand. And so the mere fact that the Chinese stock market comes down 8% doesn't mean that the whole world is going to grind to a halt. Now, the whole world might grind to a halt, but not because of China, because of what is happening in the United States. Leading up to the events of last week, we've had numerous reports of the United States retail or the United States residential housing market slowing down. Home delinquencies are up. Bankruptcies are up. These mortgage lenders that were lending to subprime are going bankrupt one after the other. They're now investigating the lending practices of the subprime market. And you have to keep in mind that about 77% of U.S. gross domestic product comes from consumer spending. And the United States economy, depending on whose numbers you take, accounts for about 40% of worldwide GDP. If you multiply that out, the U.S. consumer spending accounts for 30% of worldwide economic activity.
So are you saying there are inherent risks